Different private and public finance instruments and how it's in the market. What is a financial instrument? Contracts that reflect financial assets or liabilities are referred to as financial instruments, and they may be exchanged on financial markets. Different features of financial instruments include risk, return, maturity, and liquidity. The instrument's appropriateness for various investor types is determined by these qualities. Private and public financial instruments fall under the two groups of financial instruments. A small number of investors are provided private financial products which are not traded on open markets. On the other hand, public financial instruments are accessible to the entire public and can be exchanged on open markets. The purpose of this study is to explore the various private and public financial instruments available today. Private finance refers to the financial choices and the activities made by private individuals and businesses, such as investing, maintaining savings accounts, and obtaining mortgages. On the other hand, public finance describes financial decisions and activities taken by governmental organizations, such as controlling the public debt, allocating funds through the budgeting procedure, and passing tax legislation. Private finance's primary objective is to boost income and wealth for both individuals and businesses. On the other hand, public finance's primary objectives are the improvement of society, overall economic well-being, and the delivery of the public goods and the services that come within the jurisdiction of the government. Public finance controls research on behalf of the government, whereas private finance concentrates on managing research for people and enterprises. While private finance manages research for people and enterprises, public finance manages research for the benefit of society as a whole. Private finance is influenced by market forces, as opposed to governmental finance, which is influenced by political issues. Private finance is distinguished by relatively high level of individual freedom and choice in the contrast to governmental finance, which is more strictly controlled and subject to oversight. Generally speaking, private and public finance are closely linked, despite the fact that they serve distinct purposes and are subject to different restrictions. Understanding financial instruments. Financial instruments can be real or virtual documents representing a legal agreement involving any kind of monetary value. Equity-based financial instruments represent ownership of an asset. Debt-based financial instruments represent a loan made by an investor to the owner of the asset. Foreign exchange instruments comprise a third, unique type of financial instrument. Different subcategories of each instrument type exist, such as preferred share equity and common share equity. Types of financial instruments. Financial instruments may be divided into two types: cash instruments and derivative instruments. Cash instruments. The value of cash instruments are directly influenced and determined by the markets. These can be securities that are easily transferable. Stocks and bonds are common examples of such instruments. Cash instruments may also be deposits and loans agreed upon by borrowers and lenders. Checks are an example of a cash instrument because they transmit payment from one bank account to another. Derivative instruments. The value and characteristic of derivative instruments are based on the vehicle's underlying components such as assets, interest rates, or indices. An equity options contract, such as a call option and particular stock, for example, is a derivative because it derives its value from the underlying shares. The call option gives the right, but not the obligation, to buy shares of the stock at a specific price and by a certain date. As the, as the price of the underlying stock rises and falls, so does the value of the option, although not necessarily by the same percentage. There can be over-counter derivatives or exchange-traded derivatives. OTC is a market processed whereby securities, which are not listed on formal exchange, are priced and traded.